Hello and welcome to another update video about Natgas. Natgas continues to test our patience. I think I've been saying that for weeks now. And it's just true. Yeah, we're just still in this sideways range, maybe in the beginning of this C wave here to the upside, yeah, that we've been talking about now for a little while. 1 second, let me move that back. Yeah. So in this C wave here to the upside, which is a 5-wave move, I personally count this as an ending diagonal. 1, 2, 3, 4, 5. And in each of these waves, the subwaves are 3-wave structures. So the wave 1 is an ABC. The wave 2 is an ABC, the wave 3 is an ABC, the wave 4 as well, and the wave 5 as well. So from that point of view, it is a very hard to forecast structure, because in diagonals, what Elliott wave tells us basically is that subwave structures, and the structure is going to morph, it's going to change. Just be aware when you trade this, especially aggressively, you will get setbacks where you don't necessarily expect them. It's one of the benefits of Elliott wave to tell us that in these diagonals, you have to expect further choppy price action, and that wave counts morph, and that means you have to expect a lot of headwinds if you trade here to the upside, because in a diagonal, no side is clearly winning, and that is what makes them more difficult to trade. Obviously, I said, okay, look, Elliott wave tells us what is our make or break point. It is 214. Against 214, this wave structure is valid. Below that level, we look for a direct move down. We still expect a move down. The question is, okay, how does this C wave unfold? And ideally, it goes a little higher, ideally to at least 315. The subwave structure would suggest even a little higher, to maybe 391, maybe 452. Above that level, we would have to consider that an overall bear market low is already in. Until then, I expect we are in the wave 4 and we'll see one more low. Below 214, that's a very important point. That's our make or break point. That basically tells us if we go below that level, we have to expect that downside straight away. Yeah, and then we would have to say, all right, wave 4 was already in here on the 3rd of March. But until then, we look at a C wave to the upside, but it's not a very clear C wave. It's certainly not impulsive. It looks like a diagonal, and we've now been waiting for this smaller pullback, which has continued today. So what we say is, okay, we rallied in a wave 1 of the C wave in an ABC structure, come down in a B wave, in a wave 2. This here is now the wave 3, which is unfolding. In this wave 3, we have a 5-wave move complete. I count that as an A wave. We're now coming down in a B wave, which is subdividing into an ABC structure. I think that has continued since yesterday. And then we should see a C wave to the upside if 229 is holding. Yeah, so the idea is now that we get into an area where reward and risk are in a favorable relationship and ratio. So, but a condition would be that 229 is holding, because below the 78.6 retracement, it becomes very, very likely that we're also going to break below $2.14. So upside potential after this decline, very likely in a C wave, as long as 229 is holding. We will have support at 250, 242, and 229. Not much more to add at this stage, so I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.